Well, it's hard to say. At least we know the initial response from the EU to the letter. Actually, it came before the letter was even published. Johnson spoke to Varadkar, the Irish Prime Minister, for an hour apparently before he published the letter, and still the Irish, along with the EU, say they're not going to open the withdrawal agreement. But it's very early days. As it stands, Boris is slightly toothless in his approach insofar as he has an election overhanging. There are moderates in Parliament that threaten to bring him down. So this kind of phrasing that Boris wants to suggest to the EU, that it's either a hard Brexit or a renegotiation, doesn't sit well with the EU. They think it's either Boris is out or Parliament accepts the withdrawal agreement. So until that hard Brexit threat is credible, Boris won't really make any progress with the EU, and for that we have to wait till Parliament comes back, which is the 3rd of September.
Now, you're very good at spelling out your various scenarios with probabilities, and it seems to me now that we've got 3 different paths. We've got the no-deal Brexit scenario, we've got an orderly Brexit with some form of a deal, and then we've also got this concept of a national unity government coming and potentially extending the deadline of October 31. So how would you weight those respective probabilities now?
It's a good question. So on October the 31st, we see a 30% chance of a hard Brexit, a 30% chance of an orderly Brexit. That leaves you with 40% that we have an extension. But I would actually phrase it slightly differently and say we see a 70% chance of chaos at the end of October. A lot has to go right for an orderly Brexit or a further extension, whereas nothing has to change for a hard Brexit. So I think the market pricing, increasingly worried about a hard Brexit, is actually the right thing.
Even though the pound has actually been pretty stable, if you look at it over the last couple of weeks, we haven't really dipped below 120, 120.50 at this point. Actually, there was a headline last week saying the pound has bounced on prospect of a Corbyn caretaker government. Is that really what the market wants to see here? Does the market want to see a caretaker government led by Corbyn?
Well, I hope the market doesn't think that a Corbyn government would be good for the UK. Corbyn and Brexit are actually similar species insofar as they represent supply-side shocks to the UK economy, things that could weigh on long-term growth potential. To trade off a hard Brexit for a Corbyn government, I don't think is very sensible. In context of the pound, keep in mind, it's down 20% since the pre-referendum high. And that's all to do with the risk of a hard Brexit. So if we got a hard Brexit, it's hard to see the pound going much further from here beyond the initial panic. So the market's pricing in a lot of hard Brexit risk.
So you think that the market at this level is actually pricing in for that 70% probability that you just gave us, and probability of a chaotic Brexit then?
Well, it's pricing in a lot of that risk. I'm sure initially, if there was a hard Brexit, sterling would sell off, but then it would probably rebound pending an election. The market physics is actually very complicated. It's hard to make any conviction about the UK now in terms of trading. If we had an orderly Brexit, you would buy the UK. If there's another extension, you hold off. In case of a hard Brexit, so imagine hard Brexit October the 31st, election on November the 4th, and you know that Corbyn won't be Prime Minister. Suddenly the delta is different. Suddenly you have a hard Brexit with deregulation, fiscal spending, and the hope of a trade deal between the UK and the EU. So after an initial kind of market sell-off, you might expect actually market to go very, very long the UK after a hard Brexit.
Right, but the sequencing of that obviously and the timing is everything. But let's actually take it back to the data, because last week we had a slew of data come out of the UK pointing to pretty robust consumers still, retail sales pretty strong, wage growth still strong, CPI under control. And so the backdrop to all of this is actually pretty encouraging for the UK right now, isn't it?
Well, UK fundamentals are actually in good shape. If you abstract from the volatility in stockpiling and trade linked to Brexit preparations and the softness in industrial production linked to global worries, mainly trade wars, the domestic side of the economy looks just fine. Wages are growing nicely, household net wealth is at a near record high, credit conditions are easy. If the UK can get out of this without a hard Brexit and an initial economic shock, the outlook for the UK looks very optimistic, mainly driven by the consumer and helped along by the promise of a fiscal stimulus.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.